Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. This stream's based on structured trades that I've shared with everyone at no cost in the Bookmap Discord Trader Lab community, and there's a link in the bottom of YouTube if you want to avail yourself of that. Also, there's a library of webinars and the community itself of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading. The idea of the Trader Lab is to help you understand the business of trading, how the business actually works. It is not, in my opinion, a business of indicators and time frames, though they might have a place at times. It is really a business of understanding how the market works, why it does what it does, and how at times you can get in alignment with it with something called an edge. And all an edge is a probability of one thing happening over the other. And in gaming, or the way casinos operate, they only play games that have a statistical edge. And why would we be concerned about that? Because we have no control over the other participants in the market, news events, and anything else that might drive the market or a change in valuation. We do have control over the games we play or the structured trades we take. And if we only take trades that have an edge that favors us, then perhaps we might be sitting on the house side of the table versus sitting with the gamblers. And all trades, of course, have risk, and all trades take stops. Doesn't matter. And just like gaming in the casinos do pay the gamblers, but they're only playing games that have an edge that favor them. Might we take a successful business model, which is gaming, and remember, what about gaming in the casinos? The the dealer has no control over the cards coming out of the deck or how gamblers play the card. Their environment is 100% random. What is not random is how they play their games. No matter what happens, they deal the next hand exactly the same way. And over time, that's how they extract their edge. So if we can view the business of trading as a gaming process, then it's up to us to build plans out and only engage when we have an edge that favors us. And therefore, we might be able to sit with the house as opposed to the gamblers. And every business has overhead and cost of production. So if you can accept that, then stops are not the terrible thing about being right or wrong. If you're in business, you do have bills to pay. And if you don't want to pay your bills, then you can't be in a business. Something to think about. And that's what the Trader Lab is about. And I believe if you visit Trader Lab, you're going to potentially differentiate your outcome, assuming you do the work. And of course, general disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is not a trade calling room. I'm going to take you into what it takes, potentially, and I'm always going to say that because it might not apply to you, but what does it take to organize yourself and be prepared to actually engage in the market and then extract the statistical edge to participate and execute the edge? This is what the Trader Lab is about, and it's about helping traders understand the business they're attempting to be in and what they might need to do in order to get in alignment. This is about the business. You're interested in the business. This is not romper room. This is actually a serious community of traders that are looking to build career paths. And of course, your mileage may vary. You have to do the work. And by the way, the trades you're going to see are based on what's available in these 60 PDFs. They're also in the library, in the Bookmap Discord Trader Lab community. And there's a lot of these. I put them together many years ago, and they're broad strokes. You have to reverse engineer each piece and make it your own. There isn't one way to do this, but you can go pretty far, I think, by learning to understand what it is, not only the condition of the market, but how you might participate in it. Now I'm going to try to take you, let me, one moment here, let me go up, try to get rid of that. Hope I did. Okay. Let's try to find something here that we can maybe look at. This is Wednesday. Now, and it's important you guys, Thursday's stream, um, they build on top of each other. This is Wednesday. Now, this is the volume profile. Now, what's important about this is that this is what's called a low volume area. On Wednesday, basically the market auctioned, and what it does, it goes too high, too low. And then if a price becomes too high, we can leave it and then start a new auction. Now, and the point of this is called a low volume zone. So it's not auctioned. And what the market tends to do is it rotates and it's trying to figure out pricing. Well, if this high volume, which is the retail price around 66-ish, is too high, and we leave it, and then we start a new auction, and the highest volume for the day is down at 53.06. Remember, shopping, too high, too low, low of the day, and then here, then we've rejected this. But the possibility is to fill this in. Now, let me see if I can do this because it's hard for me to navigate all of these. I think I lost one of them. Like to show you something, but might not be able to. Probably not. I'm going to have to. I lost one of these, unfortunately, so I'm going to, and it is in the Trader Lab. Let's see if I can. See if I can find it. If not, I'm going to move on. Okay. And doesn't look like it. Okay. So I'm going to jump ahead and try to explain it to you. Basically, that low volume zone from this day, and remember, we two-ticked this low. Now, on Thursday, my plan was to potentially take this low out and continue down. Okay. And the or was because we're going into a long weekend because of Good Friday, that we would fill in that low volume area and basically balance out with short covering. In other words, nobody really doing anything, just getting out ahead of the long weekend. And that's exactly what we did. So basically an inside day. And an inside day is an indecision day. And it was what's called, I believe, a neutral day, which is nobody in control, just both sides sloshing. And it was still a very nice day for Trader Lab participants who actually have a plan for this. And it's called mean reversion. And that's a specific plan. Now, the goal was to take these lows out. And as you guys have been following the stream, you know I should say, not the Trader Lab, just me, my plan, my time frame. It doesn't mean it's a good plan, it's just a plan, is bearish and to be selling. So everything we've been doing primarily, when I say we, again, I have to refer to me, is to use any kind of counter rotations for shorts because the trend is, other than this, which is fundamental, and we rejected this. You can go over all of this behavior in my other webinars leading up to this one because it's a developing story. So anyway, take this out and down here to get into the stops here, and then eventually here, wherever. These are the targets. So let's try to Oh, look at that. This is the day I was referring to. We had the low volume zone, not auctioned. We rejected this volume. Notice the high of Thursday. Sorry about that. All of a sudden it appears. That's too high. Remember how this works. I'm not paying that. Yeah, but it's on sale. And we rotate. It's an auction. And then the high volume is there and there. Well, this is the high of the day. And what do? It's called a neutral day. We fill in the low volume because it wasn't auctioned and it's inside. Now, where do we close? Right in the middle. There's the high volume. Now I'm going to take you again into higher time frame. If we use the concepts of too high, too low, I put these 2 days together because they're really one day. And this is the retail price, 5,300 for all the volume in this consolidation. Because we broke out of this, auctioned up here, found too high, which is there and there, failed to take it out. This was a what's wrong warning or danger Will Robinson day, gap, inside, indecision, compression, lag, call it triangle, anything you want. Breakout, hasta la vista, thanks for playing. This is when you get a coupon to the buffet. Now, this is in the Trader Lab. This is just something that was thrown together. I had it many years ago for myself, and it's what to anticipate. And this is the kind of documentation that's in Trader Lab. So let's look at what we can anticipate. We opened out of range in a gap. So what does it mean? The market is out of balance. Now, balance is when it rotates over itself. That's balance. And so is the market responsive? Responsive means if we gap lower, do we get buyers and fill the gap? In other words, do we have responders, those who are short already and want to take some dollars off the table? Well, were we? Well, depends how you look at it. Let's say possibly, but not really. It's up to you. Me, not so much. So what do we do then? We trade in the direction of the imbalance, which is low. What does it mean? The market has rejected the prior interpretation of value. Why? A break from the prior day's range represents a break from balance or value, representing position trader activity. And we usually want to trade in the direction of imbalance, unless it's responsive. So we trade in the direction of balance. That means imbalance. That means shorts. And is it continuing to go down? Yes or no? Yes. What does it mean? Possible trend day. What do? Trade in direction of the imbalance. The range potential is unlimited, which means we don't know where, except in the auction, we also have targets, as you know. Why? The market has rejected prior interpretation of value. Why? The market is broken out of balance and value has yet to be determined. Until it does, trade with position traders that feel value is lower. This is Trader Lab. Now, is that something you were aware of as far as how to trade today? Now, I'm going to take you down further. I hope you're getting something out of this, and you should replay this and deconstruct it piece by piece, create like a storyboard of information and what the market is telling you. Now, let's go back to those levels. This is Bookmap. The levels that are on here are from Investor RT, my higher time frame, and it actually exports them here. These are called cloud notes. Very cool. So here's yesterday's low. This is the gap. This is a location that was too high in the ETH. This is too high in the ETH. This is the RTH open. This is the ETH overnight volume point of control. That means the highest volume. So this is what I know. Again, not what it'll do, but what I know. Let's look over here now. This outside edge is too high. The auction, remember, tends to rotate. Now, I don't know. I'm the clueless one, not ignorant. Now, I'm going to show you a structured trade. These are in the 60 PDFs I show you at the top of the stream. Also, it's in the library of webinars. These are processes that you need to vet. You can learn. You can show up like other traders do in the Trader Lab, and you put your trade on, and you either take your stop, or you get risk neutral and scratch, or you get scaled and you manage your trade, all based on your plan. The work of a developing trader is done outside of the market. You basically show up with a plan, and then you measure yourself not on the outcome of the trades, but on your ability and skill to follow the plan. And why would you have a plan? Because you've done the work to know under these specific conditions, there are specific trades that you have reverse engineered, structured trades I've shared or others you develop over time, and you know you have a statistical edge. It isn't just making it up as you go. That's just fantasy, and that's gambling. And we know what happens to gamblers. We want to be the house. So if you're still gambling, I hope you're enjoying it, but it might not be the path to longevity and creating a business that is sustainable. You might just be passing through and visiting. Make sure to get the cocktails and the ticket to the buffet. So, RTH open. What do we know? We gapped out of balance the 2-day compression, and we gapped out. If we reject that with the gap, and we know the trend might be down in the higher time frame, subject to your analysis. For me, it's only been shorts, and it doesn't mean I don't take longs. It means the strength, what's moving the market are the sellers. The counter rotations, which can be buyers, are primarily squeezes. And the idea is if we know the difference between directional with the trend, subject to how you define trend, again, it's up to you. Some traders will take longs and shorts because they want to participate in the counter rotations. I tend to trade a little more mellow, mellow fashion. I want to use counter rotations to get aligned with the strong side. This is the first trade in Trader Lab, and it's called VPOC migration in alignment with the trend, which might be down because of the gap and the condition overall of the market, which is, we'll see you later, subject again to your plan. This is a sweep. When I see a sweep, I'm looking for reversal. Now let's go a little further. This is called developing volume point of control. It opens at RTH open, which is basically here. I get the sweep. I've set this up for me. I want to see sweeps because if you study sweeps, you'll know the potential exists that we will counter rotate. So I want to get short. So I start out going, where can I get short? I'm above this, and I have about there's statistics, but roughly about an 85% probability of going here. Past performance not indicative of future results. Remember, all this is available. And I have this low from Wednesday that, I hope I got the right level here. I'm going to lose it 52.51, right? Yes, that was a poor low. So I have a statistic over 80% here, a poor low over there, and I want to get short. Now I'm showing you how I put pieces together. I have the buy sweep looking for a reversal. Now I need a location. This is called the developing volume point of control. This is a structured trade. If you have questions, by the way, please post them. And if you're visiting in YouTube, I hope you get something out of this. This is Trader Lab methodology. By the way, the Trader Lab is an advanced trading process, and it's not complicated. You just have to learn to speak a foreign language. I don't use indicators, by your typical stuff. I read it because this is language. What an indicator is Google Translate, and your indicator may tell you to get long here. I have no idea. Well, indicators are not context specific. So, if it works for you, great. But if you have conflict and you don't know whether you're coming or going, and you have no consistent process, then you are gambling because you can't measure it. We all have winning trades if we just throw a dart at the board. This now is the highest volume. Let's look what's going on here. We get our responsive buying. Now, these guys are responding to the lower open. Lewis, we got profits. Grab some. Okay. But me, since I don't have any positions on, If I see the rotation up, do I want to be a buyer? No, I want to get short because I've broken out and I know I have higher time frame now. That's what moves the market. This is called developing volume point of control. And you guys see me do this every day in the streams. If you look at the library of webinars that are in the Trader Lab, you see the same thing over all these years. What is different is the condition of the market. And as the condition of the market changes in the Trader Lab, the idea is certain trades are qualified under certain conditions and other conditions they're not. This is called the variable high volume node. I made these up. Nobody was doing this as far as I know when I started doing this. And I've been using these processes since the 1980s and then refined them over the years. So this is too low. I'm going to mark it because this was the price we rejected. Now follow the yellow brick road is what I like to refer to it. Variable high volume node. And this is shopping. Remember what the market is. Too low, sweep, and now where are we going? To the moon, right? VPOC migration. Two possibilities. And there's a webinar on this in Trader Lab. Up, break. Right here is where the first short sets up. Here. This is your micro high volume structure. No clue. I see the break. I test right here, too high. Right here, I break. This is now resistance, right here. Resistance, resistance, resistance. This is a short. It's aggressive, but your stop would be here. I can handle that. This is a short in the Trader Lab, and this is where you need to be scaling. You have enough room, and then follow. Watch. Where's resistance? Here. That's a short in the Trader Lab. Let me show you the locations. There, high volume node. Scale is here. Stop is there. If you didn't get the first one, you've got this and you got this, your stop would still go there. This is right here. Let me just put it right there for you so you can see it. Trader Lab short, Trader Lab short, short. There's always, often, can't say always about anything, there's often more than one opportunity if you are in alignment with the context. And of course, you could take a stop. So how do you trade this? Short to there. Trend is down. And then statistically, 85% to get there under those stops, pour low, and then there is the next target. This is structured trading in Trader Lab. You can learn this if you find it interesting. Let's watch behavior here and here. Remember, this is the next target. So target, overnight volume point of control, target. These are structured trades. Let's watch. We have VWAP, mid, and now we've rejected what's above, and we have these distributions, auctions. Remember, too low, too high, retail. If I leave it, I'm not paying that. Well, I'm definitely not paying that, the auction. Outside edge. Now what? As I sequentially move down, the market is looking for value. So it stops, it checks a price, and if it doesn't like it, I'm not paying that. We keep going. Now, let's look at our order flow. And if you have questions, post them. These are all structured trades. VPOC migration. I'm not paying that up here. Forget it. You guys are crazy. You want me to buy S&Ps here? I'm leaving. I bet I can buy them for less down the road somewhere. Too high? Now what about this? What do we think about this? Let's follow it. Follow the yellow brick road. Trade plan is a narrative. And our next target is 5150, by the way, just so you know. Where's that come from? It's right here, 46 and 50. And then down here, 5100. Who knows? Not our job, right? So if I know that, And I don't know what's going to happen. So this is VPOC migration. What was this? VPOC migration. VPOC migration. I'm not paying that. What's this? VPOC migration. You got to be kidding. Oh, let's see. VPOC migration. What's this? VPOC and VWAP to VPOC, structured trade in the Trader Lab. Let's watch it. Now, there's a little more to this, of course. What was too high? Right there. I'm going to throw a line on here. I want you to see structure. And what is this? The retail price. What happens down here? This was very interesting to me. I get the sweep. Remember the short at the top? It had a buy sweep, reversal. What do I get here? Liquidity, buying icebergs, sell sweep. Where's my retail price? Here. If I come across, where's my last retail price that I left? It's there. And there's another trade in the Trader Lab. It's called VWAP to VPOC. It's a mean reversion continuation short. Let's look at it. And I know a number of traders in Trader Lab took this. There it is, right there. This is a trade. Your entry is here. And then you got to go here for a scale, and then you're looking to come out the bottom. Structured trade. VPOC migration. I'm not paying that. Are you really? No, I am not going to pay that. Huh. Well, it's too high again. The shoppers are leaving the store. Post your questions. I'm going to come up for oxygen here in a little bit. Now, have you been taking longs? Another short, another short. And there's more. So these are all Trader Lab structured trades. And I would suspect if you have a vetted trade plan that you're having a very pleasant day in the Trader Lab. Let's keep going. VPOC migration. See something familiar? Now, it's very important to understand the fact that the volume point of control shifts down. It doesn't mean we're not going to rotate around it. If we rotate, it sets up a condition inside a condition. This is called a trend day down. Remember at the top of the stream, I showed you that schematic that directs me and helps me understand the condition of the market. By the way, do you have questions? Let me go take a peek. Willers, that IB low, 1.5, what does that mean? How we doing, guys? Please give a like, support the stream. It encourages Bookmap to keep this going. There's no cost for this, and this is advanced. So, and advanced doesn't mean you can't learn it. What it means is it's going to be different than what you probably are doing and how you perceive what's going on here. It is not the same as most retail traders do. And I was actually over this weekend, I did a little cruising around the internet, and I kept, seeing all this hyperbola. The only thing you need, such and such revealed. It's like, yeah, really, candlesticks revealed. How I made $1 bazillion in 14 minutes. And I'm saying they're still doing this, right? When I started in trading, which was 1980, then it was seminars because we didn't have personal computers and there was no internet. So if you had a thirst for knowledge, you had to pay. And I can tell you, I went that route a couple times, not too often, I think twice. And I got to say, the first one was a complete waste of time. And I had to travel to another city and fly and do the hotel. It cost a lot. I walked out of there with, what am I going to do with this? It all went in a round file. Didn't help my trading. This is VPOC migration. What do we get here? Counter rotation. Notice the liquidity comes in the book. It's like somebody giving you a pinch on the butt. And there it is. Now, two possibilities. Let me show you. Now, this is structured trading. Here's the possibilities. I can come out here and revert back to here. It's called mean reversion. Or I can come up here, I get my sweep, and remember at the high of the day, how did I get short? Lucky in a structured trade with a sweep. What does that suggest? Lower. That's what it suggests. Still short. These are either ads or you're using these structures for trade management. That is something you have to determine. And the other part about this is if you can accept we're in a random environment, then we don't know what's ever going to happen at any moment. We don't know if a tweet's going to come out or somebody trips over the cord at the CME. You don't know any of that, right? So let's look. Too high, they pull, break, buy sweep, liquidity here pulls, comes back in. So this is not real. And what about this? Not real. Where are we going? Let's come back. Now, when I say where are we going, is I don't know where we're going, but I do know I have stops sitting under here. So I'm looking for this and out. Because where does the market go? All these longs that came in lower down are potentially going to be thrown under the proverbial bus. Variable high volume node, new retail price. Let's keep following the yellow brick road. Post your questions. I'm going to be caught up pretty soon. You know, not a lot of trades today, just very profitable trades. So this isn't about the video game. This is about strategic thinking, planning, and alignment. Remember the purpose of the stream, how the market works, why it does what it does, and how you can get alignment at times with it. This is a short, and this is the target. Short here, structured trade. This is mean reversion. The mean is there, the mean is there. If this is too high, remember it was too high, and I check it, I'm not paying that, then we're going to come back down here, which might have been too low. Scale. What's the trend? South of the border. What else do I have? We have a structured trade in the Trader Lab called the IB continuation trade. There's also over a 90% probability, past performance, not indicative of future results. We take out either the first hour's high or low. I'm going to step out on a limb and say, I think it's going to be this one. What do you think? Well, if we're going to take this out, then if I get short here and it's 930 with over a 90% probability and so I have a 90% probability of coming out under here where I had my sweep and my liquidity, which sets up this, then I have this to come here to continue. Why wouldn't it? And why wouldn't it? Only if the buyers come in. So sell here, scale there, 90% probability, hold, put a helmet on, and watch. Now, I take this out. That's my 90% statistic. However, in a trending configuration, I have a continuation trade called the IBC, or IB continuation structured trade. If you're in Trader Lab, what do you know? Too high. What do you know about this? Too high. What do you know about this? Current retail price. What else do you know? Too high, too high. Watch. Where do we pull back? Here. What is that? Outside edge, low volume node, IB continuation trade if you have it vetted. And let's just watch it. Break low, sweep, suggests counter rotation. Let's see what, and this becomes a very important location right here. Watch. Buying icebergs, buy stops, selling icebergs, buying icebergs. I'm seeing buying icebergs. Now I want to watch for potential change. My sellers, this is Delta, are still in control. They're still the aggressors. What happened here? This is an advanced Trader Lab trade configuration. It is when we break here, I get my sweep. I'm looking here Again, this is not a structured trade per se. This is advanced. You can learn this in Trader Lab. This is a short ad. Stop goes up here, and you're trailing, you're scaled again. So all these are shorts. You could be holding a core position or trading in and out or adding, coming and going. It's all a matter of your plan. Where's our target down here? It's here, 46 and change. Where is that, you're asking me? How do you come up with this, Tom? Well, it's there. See the 46? See the arrow? That's my next target. And then this 5100-ish, but this is my primary. And also what I observe with these things often is that others are going to target ahead of this and we're going to counter rotate or we're just going to take it out. So there's always trade management as part of this thing, right? So let's see where we are. And there we are. Now we're now current. Let me look at your questions, guys. Thanks for your patience. I hope you're finding something interesting here in the Trader Lab. And I'm also hoping that you'll give us a thumb up and a like and come to Trader Lab. Use the link in the bottom of YouTube. There is no cost for Trader Lab. It's currently no cost. And, whether or not it's going to stay that way, we never know. But it's a great community and it's for serious traders. Um, if you come to Trader Lab, you're actually going to have to work. Nobody can hand this to you. If it was that way, we would all take the same seminar and then come back home and start trading and have an ATM in the basement, right? Wouldn't you have done it? I can tell you when I was going through my learning curve, and it wasn't curve, it was more like cross country. There was no curves. It was just flat. And I kept coming back with Trader Groundhog Day, working hard, uh, and then waking up with the same outcome because I didn't have a statistical edge. I didn't understand it was gaming, not indicators and time frames. So I was solving for the wrong thing, looking for certainty where it doesn't exist. So it took me a long time to understand I'm not in the prediction business and the confirmation business. I'm really in the maybe business. Maybe it'll do this, maybe it'll do that, just like the casinos. Maybe they'll win the next hand, maybe the gamblers will, maybe. So we're still looking for this, not a recommendation, and now it's trade management. Um, let's see if I got everything in here. I'm trying to get in here. Low volume, low volume, low volume, high volume. Okay, questions. And thanks for visiting Trader Lab. And don't forget, there's a library of webinars if you're interested in this, and also the community. 60 PDFs of structured trades. If you're interested in those, you can have all of those. Mike. How we doing in YouTube, guys? Ben, if you want the sweep settings, all that's available in the Bookmap Discord Trader Lab community. So use the link in the bottom of YouTube. Everything is in there. And I think we like to say, and the kitchen sink. Let's look at this. Now, there's no way to know what's going to happen. This is part of trading. You're never going to catch all of it unless you get lucky. And luck is not something you take to the bank. You create luck by statistics. Okay. And we are going to pay the gamblers because casinos pay the gamblers. It's just overhead and cost of production. When you are fearful, what are you fearful of? I had a lot of posts over the weekend in the Trader Lab because traders need to be reflecting on what they do, their emotional states, and their emotional triggers. This is resistance here. Now, this is not well, it is actually. I was going to say this is not a structured trade. It is a trade. This is called mean reversion. Let me show it to you. I don't multitask well, so I can be talking to you and I don't see what's right in front of me. This is resistance. Let me just throw a little box around. I want you to see structure so you know what you're looking at. When you see this is this consolidation is an auction. So we have to look at the outside edges. We have an outside edge here, low volume node. So I'm not paying that. Retail is here. This sets up a potential short, and this is not a trade recommendation, out in here, back to there, and then potentially down here. Now, this is called mean reversion, and it doesn't mean, now you have to have a vetted trigger. So here we have location, and here's the other thing you got to know about this. Right above here are stops. The high volume, where it says HVN, I'm going to put a little line in here. So this is where the retail price is. We break away and we check here. This is a potential short here. There's going to be stops here and stops above here. So this up in here, in other words, I can pop in here and then come back here and come down here. So we're going to see what it does. And it's not a trade recommendation. What we do in TraderLab is not predict, because we can't, but we can understand what the structure says. Remember, this is the language of the market, and we don't know what's going to happen. You know, that's just part of the joy of randomness. So we're not in the business of predicting. We're in the business of looking at structure. We have structure at 51.71, and we excuse me, we have structure at 64. So I'm going to put a little this LVN, okay? So I'm just going to put this up here so we don't forget where it is, just in case. And there's no precision in levels in the auction. You know, stops create momentum, and there's going to be stops out here. Okay, we're coming above this, so that potentially we have to see how far up we come. This is retail in this distribution, and this is the outside edge. So if I'm pushing through here, my next level to observe is here, and I have nothing to do. So I'm just hanging out with you. So where's too high? These buyers were absorbed by the sellers up here. So I have my sellers here. I have my volume there, which is like the shopping price, and I have my outside edge of this up here. So I can come up into this and revert. It's called mean reversion. Or I just keep squeezing and then I don't have a trade. I just have to look for a trigger. So I'm going to be looking here. And the idea is if I do, I have to remember two things. There's stops here and it's a flat top. So anybody who's short, like sellers in this leg, have their stops up here. So remember how the market works. The market goes up to go down, and the market goes down to go up. So if there's late sellers in here, they're getting taken out. There's the buy stops. So now we want to see how far up do we come. So we're just going to look now. Where's our location? We have another location back here. So I'm going, and we're watching this now. Don't forget, we're watching this. I got to mark another little location here because it was a change in behavior. It has to do with order flow. It's advanced process. Remember, this was also an add and a short. Advanced methodology. This is now resistance. It's here, and we can squeeze. So right here is an important area to observe. Let me look at your questions if you have them. I'm not going to be looking at this, so you already know what we're looking at. High volume is there. Microstructure is here. I'm getting a sell sweep. We have to see now if we come across here. I would like to see, if I had it my way, a buy sweep and then a rotation here. I have a sell sweep, so I can use price action. There was absorption right here, and this could potentially be a trigger. And then we have to see if it comes to there and then there. That's actually what you got going here. Questions, guys? How are we doing? Please give a like. Hope you're getting something out of this. If you want more information, you're interested in the statistics and everything else. SW, go to the Trader Lab. There's the structured trades are a small piece of the whole thing. This is a structured trade here. There's your high volume right there, right there. This is called a fractal. This is where you're trying to go. I don't call trades, and this might not be a qualified trade, for certain traders. For me, it is a workable trade. I have to enter in a timely fashion because I got to scale ahead of this. Now, this might not be a trade that some traders can take because most retail traders are fearful. It's just part of our wiring. It takes courage to be a trader, and also you need to accept that you're going to take stops. So right here, there's the absorption. There's the break. The sellers are below the buyers. That means these guys were absorbed. Here's the test. If you get short, you got to scale here. Might not be enough range for you. You see their behavior? So it might not be your trade. I look at this like the way I observe it and think about it is the auction, the way it works, call it auction mechanics, are generic. The market does its thing. What's too high? What's retail? If this is too high, we're going to come out and maybe keep going or not. Or we rotate around and squeeze out to here. All these are possibilities. Nobody can predict. So if I think the trend is down, I know the following. I know that the market's short and we can squeeze, so I know that. And I know I can get rotations with the trend down to high volume areas. If this price is too low, I can come back across the range and squeeze. That's as deep as this is. It's not more complicated than that. I don't know what it'll do. But here's the other part. Auction mechanics do not care about the range that we need for risk reward. If I can't enter because my stop's got to be up here and I don't have enough range to get risk neutral, which is here, then I don't have a qualified trade. If this location was out here, then all day to take this back to here. But what you're seeing is how the market works. And if you can learn how the market works, and I'm going to suggest your market does not work based on your indicator. That is not the market. This is the market. Your indicator follows price around or some derivative. Does it tell you that you should only take shorts today? Well, it doesn't have to tell you that. Do you want to be long or do you want to be selling? Where do you think the edge lies? Those are the questions, but the answers are in your trade plan. You're in Trader Lab, you know what you're doing before it shows up. You know where it'll show up, but you don't know what the outcome will be. Casinos know how to play their games. They don't know the cards coming out of the deck or how the gamblers play the cards. They just play their games. Well, this is a structured Trader Lab game, you see. And you can learn this in Trader Lab. Questions, guys? How we doing, guys? How about a thumb up? Give a like. So, what do we know? Trend is down. Anybody disagree? Feel free to post and just show us why. What else? Stops are sitting under here. Do you think we're not getting there? Now, we can't predict, but where's the fuel? Where's the market attracted to? It's attracted to do business. This is the next location. As long as I have this open, and maybe more, I only have shorts, and this is my last short. If it fits. If it doesn't fit and it's not qualified, guess what? Your job is not the FOMO in. Your job's not to trade it. Your job is to go, wow, that worked. Didn't fit my risk reward or my based on way I can enter. So I don't have a trade, but look at that. That's the auction. Look at that. I reinforced it in my mind. I'm training myself every moment I'm in the market. I have a plan. I'm seeing how my plan and my psychology align. I understand that I have to work on being the best I can be anytime I'm coming in the market because this is performance. Once you know what to do and where to do it, now it's about performance. This is why I do replays randomly over the weekend. It's no different than being an athlete who has to go out on the court and practice. Do replays, get coached, have a plan, have a self-improvement plan, have an accountability partner. That's what's going on in Trader Lab. We're all partners in this. It's a community of traders working together. You need an accountability partner. You need to develop the courage not to let your ego. I mean, so many traders that are in anywhere, Trader Lab or any education portal, will not post, are embarrassed. I don't want to look, quote, I don't use the term, not smart. Let me tell you what that is. That's the need to get approval. That's the need to get right. And that's putting your ego in front of your development. If ego is the number one element, how does that affect you psychologically? Because now you're only going to trade to be right because you need the approval. Isn't that ego? And isn't it that you don't want to look, well, the word we tend to say to ourselves is stupid. Then you don't post, you don't participate, you don't ask questions. Who's that helping? Certainly not you. That's human nature. That's hide. That's the lunatic under the hood. You got to remember where you are. The only approval comes from your trade plan and you following it, not the outcome of the next trade. That has nothing to do with it. How do you measure yourself in this business? Only taking trades that have a statistical edge. Are you concerned every time you put a trade on about being wrong? Now, emotionally, we are, of course. But what about the business you want to be in? This is not a test every day. This is bringing your plan and executing your plan. No gold stars for getting a winning trade, but you don't get demerits or get sent wherever to detention for taking a loss if it's vetted. You actually move your potential career forward when you follow your plan and take a stop, because all businesses pay bills. There's this thing called overhead and costs of production. If you make it about being right and winning, you're not going to sustain yourself, in my opinion. I've seen it over and over and over again in my years. I've coached a lot of traders over the years. You know, you're doing this going on 46 years, you get to do that. So why? By the way, here's something else for you to look at. I'm going to give you just some structure to ponder. Let's ponder together. Let's ponder some structure together. Let's ponder some structure together. Let's ponder some more structure together. Are you guys tracking? This is Trader Lab. Ben, how do I know for mean reversion? Well, it could be either one. LVNs, outside edges, to HVNs, mean reversion. It also can be HVNs to HVNs outside. So for me, in this configuration, I'm only taking shorts, and I have to be getting in at a location that I have enough range. This is using a shoehorn. So this, what's important about this is to understand the structure that creates this. High volume is sitting here. Outside edge, microstructure. This, in this little store, was too high. In this store, this is too low. So I'm going to auction these levels and come out one side. Now remember, where's the stops? They're sitting here. You always got to look left, guys, because you have to consider what's the levels. There, there, and there. So if this is too high, I'm not paying that, and we break away. If I come back and test it, I can short it. If I come back here, more aggressive, I can short it, and I got to try to get here. And if I can come out down here, then I'm back on the this. And then what might I exit? I would scale ahead of this location here. Let's throw this on the map. You'll see. And why? Why? Really about there. Um, because this buying icebergs were here. See the sell stops, see the buying icebergs. A lot of sell stops came out. The icebergs took the other side. And see the change in behavior. The buyers are here, and these guys were absorbed, and the buyers came here. So this is where my buyers are. So right here. So any short from here or here, stops are out there, is to get back here and to come here. This is also a structured trade, but this is a little bit more advanced. You wouldn't start with this because you have to be able to speak language of the market. And learning the language of the market is like learning a foreign language, and it is foreign. So what I found after many years of working with trading systems and indicators and hybrid indicators, and I mean years, we're talking not months, years, uh, I figured out that I was solving for the wrong thing, and I was curve fitting, and that curve fitting is a defective process in trading, and most of us are tweaking and tuning and curve fitting. That's what we do, but that's what most retail traders do, and the failure rate is I've heard is 90% or more. Well, if 90% are doing the same thing, maybe we can learn from that and even learn from our own experience. Maybe it doesn't work. Now, if it works for you, that's great. Come to Trader Lab, clue us in. But, and if you understand, here's the thing about indicators. The indicators don't lead things, they follow. If you can understand how the market works, you don't need to be following. You could be leading, which means the potential to enter the market in a more timely fashion with less risk and the ability to get risk neutral quicker. Does that make sense? Then where might we go with this? Well, we got to be aware where the buyers took over because we might find these buyers again. So I have to get risk neutral. And then where am I trying to go? Under here. Not a recommendation, it's just simple Trader Lab methodology. The methodology is advanced, but it is very learnable. It's just a matter of mindset and understanding really what it is you're trying to do and the tools you're using to try to do it. And the other thing is the beliefs you have. Have you ever considered maybe the things you believe are not in alignment with the actual business you're trying to be in? I mean, I understand. I thought it was just persistence and tuning and tweaking and time frames. And to one extent or the other, that's what I did. And but I kept coming back to the same issues. Too high. I'm not paying that. Get out of here. Too high. Too high. This is where my support is. Targeting. Anybody take a long yet? Let me know how that's working out for you. So far, no reason to be long. That's not a trade recommendation. Now, here's the other thing about this. If, now this is our next target and we're wherever we are over here, not too far from it, right? It's like 48-ish or so. So down in here, this is where we're trying to go. And there's nothing under here. We have this as a potential target. And if we get under here, you'll notice how skinny it is. Remember what happened up here? It was skinny in the middle and we filled it in. Well, if you got skinny down here, what might we do? We get under here, fill it in. Now we don't have to. Now, ever, never. We're not predicting. We're looking at the auction, and this is where we had that move off of the 90-day we'll catch you later move. And that was the big squeeze, right? And we came technically back to this level too high, you see? Well, we can't squeeze these guys out. Then who's under the bus? All of these guys. So Not that that matters. What matters is if that was skinny and we filled it in, and now we're rejecting this, where is the last place? Well, stops are here. We'll see over there in the stopateria, maybe, not a recommendation. And you guys can watch this for the rest of the day. Now, if we don't take it out, then we'll get short covering, maybe new buyers, and then potentially sell stops below today's low if we don't take it out, and then eventually take it out. So that's my plan. And if things change, it doesn't matter. I change. You know, this is not a predictive business. This is a business of alignment, right? So let's watch. So with this trade, what would happen here is if you took it, you'd be using trade management, and that's an individual thing. You have to vet that, and then you'd be out of this trade, or you'd scratch it depending where you keep your stop, or you would not take the trade. So now let's look further. There's a buy sweep. These are locations. Where's my outside edge? Let's come back. Let's come back. Where's my stops? Here. Does that make sense? So if now, so what did I get? These guys set up a short, counter rotation. Buyers are in here. Who knows? Now where are we going? We're squeezing these guys out and these guys out. And now we have to look out here. Not a recommendation. And what is this? If the trend is down, outside in trading is called mean reversion. So, and this can do anything. It could just keep going up, you know, or we get a tweet or somebody falls over something, which of course can happen. Then we'll see. So let's watch this. Stops are here. Let's watch. We're having a sweep. Now we want to watch for a counter rotation. This is not a trade recommendation. Liquidity jumps in the book. They didn't pull. Sweep is here. Potential triggering setting up. And this is not a trade recommendation. This might be the target. Let's just see what happens. It's always maybe, right? Follow the yellow brick road. Remember where the stops are and watch the liquidity, the order flow. This guy pulls, opens the lid. Notice added 98, removed 98. So what is that? And where's the stops? Here. Part of my plan is I want to see stops come out because I don't want to step here and then get popped and then have the real move, you see? So I want it to test this. And what did we do? Let's put the rationale together. We tested. There's my sweep. There's my stops over that swing. This sets up a short in the Trader Lab, and you're going to try to go here. And it's not a recommendation. And it's called mean reversion, structured trade. Now, the sequence, though, is random. So if I take this short, I'm okay with that if it fits. But if I take this one, I'm okay with it because I have to get risk neutral. If I get taken out, I can come out here and just sell it again. I only have shorts, and you have to vet this for yourself. You know, I take stops, and I feel the same. Hear the word? I feel the same way about it. But I don't let my feelings control my business. I understand I'm wired for these emotional responses. Fight and flight, stay away from the saber-toothed tiger. I get it. Don't you? Well, if we're going to feel these things and we can't stop our feelings, then we have to know where they fit and where they come from. So we have to acknowledge how we feel. We have to understand what triggers it. And we have to understand how it interferes with our business. Because our need for certainty, which is based on our ego and our need to be right and get approval, has nothing to do with trading. It has to do with our emotional state. Can you differentiate that? Yeah, I want to be sure. Does that go through your head? I don't know. How can you know? If you understand you can't know, then what are you waiting for? You know? You mean confirmation? And what is confirmation? The need to be right, the need to avoid pain, the need for certainty in an environment where it doesn't exist. That's something that needs to be kind of, I would say, drilled into your consciousness because your unconsciousness is responding to chemicals. So you're under the influence of chemicals when you have these emotional triggers. You know, oh, there's a saber-toothed tiger, risk. So we're wired to avoid risk. Say, let's see now if we come out here what happens. If you took this, you have to, where do you have to get risk neutral? Well, VPOC or price. If you took this trade and you were going for this, you would take a stop. Not the end of the world. I mean, it's only a couple points. Considering the kind of day you've been having so far, it's just overhead. Now, we are still looking out here, and this is not a trade recommendation. Let's go back to the premise. Stops are out here. This is a low volume zone. So this area here is created by the drop. So the last place the buyers were up here and they failed. So now we want to look. And if we get a trade, not a recommendation, we're looking to come back here. So and you could scale sooner if that's in your plan. And if we keep going, there's no trade. Let's see. The outside is up here. Now, if it keeps pushing through, I have to keep looking outside. Is there a mic issue, guys, in YouTube? How are we doing in YouTube? Please give a like. Is there a mic issue there? Okay, thank you, Ben. So, outside edge, and there's more outside edges. Remember, the market is short. What do we anticipate? Somewhere stops. So now let's look here. We had our buyers here. The sellers took control back here. So we're coming outside. These are important locations for continuation. These are, and I always have to say, these aren't trade recommendations. We all take stops. Nobody likes a stop. I have not, I'm disappointed. That's emotions. You can feel the emotions. But what do you do about the emotions? It's the difference. We all are fearful. So don't worry about it. This is not about being, machismo or any of that stuff. This is about strategic planning and knowing where your trade might show up. I know my trade might be out here. I don't know where, I don't know if, I don't know when, and I'll take a stop if I don't get it right. And by getting it right, I mean, if I have my trade, it fits my parameters, which is out in here, and it could be up here too. See, LVN is moved. So I'm looking, see the outside edges are where I'm trying to come. And the further outside I come, the better it is for my trade because that's the mean. So it's mean reversion. It's the same context outside in. So I need the counter rotations in this configuration, which is a downtrend, to try to get back in alignment. I have to look back here, right here, and this is my area to be looking. And my outside edge is up out here. So I'm looking, you notice how this is coming off Investor RT. This is just something I threw in here. So I'm going to be using this level because this is where the low volume is to come back here, mean reversion. And if it keeps going, I don't have a trade. I just, And what was this up here? Remember? this. That's important. Let's edit it a little bit. Okay, nothing to do. Hang out. We're up in our zone, and we have this is where right here was the last short, unless you were taking, this, which is fine, all subject to time frames that you operate in. I just kind of go follow the yellow brick road. So I'm still looking for shorts, not a recommendation. Market could just keep going, or a tweet comes out and, things get nasty. And that's part of trading also. It's just is what it is. You guys have questions. How we doing? Location, location. Let's keep an eye here. Not a trade recommendation. We are stalking short. Buyers are here, sellers just got underneath. So we have micro high volume right there. So this is our little over under, this little node sticking out. This is a auction. Sellers got below, but I have a sell sweep, so we might take this out. This is an important location to observe. Outside edge, important location to observe right here. Liquidity stacking. Let's watch. So we can either do one of these or we're going to trigger here. And again, guys, this is just the possibilities, not a recommendation. Outside edge, high volume node, sweep, potential up move. Resistance is here in the microstructure right there. So I'm using order flow, auction volume, microstructure, and all I know right here is my sellers are here and here, and my buyers got absorbed up there. So my buyers are above my sellers. This is like the shootout. If I come across here, I keep going. I have nothing to do. If I break here, it's a potential structured trigger, and it's not a recommendation. You can see what's the pause here. This is an auction. What do we think, guys? Should we sell this? I mean, that's what they're saying, not me. So you see, we're near an outside edge. And where are we trying to go? Well, first of all, it's subject to your plan. You want to get risk neutral, and this is a function of trade plan. So if you it's a minimum two lock configuration, and this is just the basis for getting started in TraderLab. The idea of a two lock configuration is number one, determine if you actually, when you have structured vetted trades, wherever they show up, that you can get risk neutral. In other words, buy the stop on your runner before taking a full stop. So the worst that happens, you scratch and your broker sends you a gift basket. If the trade works, after getting scaled, then the next part of this is where's our target? This initially, and then out the bottom, right? This is what trade plan is. And the outcome of this trade is as random as any of the other ones one might put on. Because if we come over here, we're going to take stops and squeeze further. And then it's the same process from a different location, which is to come back here. So at the moment, mean reversion. And this is an obstacle on the other side, remember. So we have to move that out. And because it's an area where buyers were. So if I can get a short here, not a recommendation, I'm looking for this, and then I'm looking for that. Or just there, or get risk neutral, scratch. That's it. There is nothing more. You can understand that, then That's about as deep as this goes. And this is where my other area of resistance is. So what I know is potential short here, looking for this mean reversion. Push through, next layer is out here. Same trade. And if I keep going, then you put the Honda back in the garage and you wait. This is as deep as it is. This is Trader Lab. This is trading in fractals and using the auction. There's no indicators here. What there is language. I'm watching the order flow, the language, and I'm following a plan. And then either, whatever happens, happens. Losing trades every day? You should change that name. Did the sellers go to sleep? No, they haven't gone to sleep. It's the sellers' buy stops that are coming out, the weak sellers. And what are the higher time frame participants potentially going to do? Same thing I'm going to do. Use the squeeze for continuation shorts. This is Trader Lab process and methodology. I believe anybody can learn this. Over the years, I've sat with many traders on a trade desk and coached them. And not everybody, of course, can do this because they don't do the work or they can't control their emotional states, which is, I think, the hardest part. Anybody can learn how to trade, I believe. I believe I can teach anybody to trade. What I can't do is do the work or determine the grit it's going to take to come back and keep making emotionally triggered errors and what it takes to gradually get control over yourself. Now, yourself is your analytical, intentional self, and your other part of yourself is the lunatic under the hood, your emotional triggers, fight and flight, fear, needing approval, all that. If you're in Trader Lab, and this is a message to all Trader Lab participants, if you're not posting, asking questions, mocking up screenshots, and you're not doing it, you're wasting time and potentially squandering your opportunity. How do you learn? You got to take your need to be right and to look good. It's one of the reasons you won't progress. That in and of itself speaks volumes about what controls you. Is your desire to learn a business stronger than your desire not to look uninformed? Most of us, I think, are more concerned with the latter than the motivation and determination it takes to build a business. There's our HVN, remember? So we have this one, too high. This is another. So what the market tends to do is come outside. I'm not paying that. And then come back to high volume, which is here and here. So if the volume point of control shifts, which is saying it might, because we're getting pretty close in volume, then this becomes retail, and then this becomes a variable high volume node here. Or, I'm sorry, here. So the possibility is to come down still to here because the trend is down. So outside, in, and we have to watch this here. This is very important, but I'm looking for this. Now, looking for it is not predictive. It's that would be nice. And then out the bottom, but I got to clear this. So we'll see what it does. Questions, guys? Are you following this? Interesting. I don't know what I said that was funny. I'm going to have to watch the stream. Nunu84, great question. I have found that if I'm trading dollars, I'm at a disadvantage. That's hide. That's a FOMO and fear of loss deal. Okay. When the conditions are right, like now, I just keep taking shorts when my trades show up because the only way I will stop trading for me is, well, number one, I'm streaming. But other than that, I take every trade that shows up that's in alignment with my plan. That's my job. So, and what do I know as far as, do I stop trading when I'm up, let's just say $1,000? Well, if I keep trading, what happens if that's a $5,000 day? Then what do I do? You see? I need those days to offset the days where everything is ugly, where I get scratches, stops, some winners, and when the dust settles, my broker comes to the door and hugs me for sending his kids to camp. So that's part of the equation also. Remember where we're going for this, right? So here's the thing. What did I say to you guys? And this is not about being right. Where's my next trade? Well, if the trend is down, what do I have to operate with? Mean reversion. What is mean reversion? And the joke in Trader Lab is, yeah, it's mean. What's mean about mean reversion is where's the outside edge? Is, was it here? Was it there? Is it out here? You see? So that's a different skill set and a different plan in a plan. So it's shorts only, continuation trades, and in the Trader Lab, it's mean reversion. And then where are we trying to go? There, and now here, we have to observe. But what else do we know? Let's come back to what we know in an environment that we know we don't know. Here, and then after that, it's trade management, assuming we get through it. This is also a target down here, not a recommendation. All these are on the price map. Where'd that 5110 come from, you're saying? Well, let me show you. Is it 51? Yeah, this. And there's this skinny zone here. Remember, I get under here, we can very well just come down here. Not a recommendation, but it's interesting, isn't it? Questions, guys, please give a like. Also, subscribe to the channel. And there's a link down there in the bottom of YouTube if you want to visit the Trader Lab. There's a lot of resources in Trader Lab, but I think the greatest resource is the community because you need a community. There's a lot of work to put this together. It requires a community to do the data mining and the research and discuss these trades that I've shared, plus develop others. There's much more you can do, much more. I do share advanced processes that are not part of the structured trades, and there's a lot more in Trader Lab going on. But I think the most powerful aspect of it is that traders are helping traders because we all walk in the same shoes. The problem is most of us keep doing the same thing, thinking it's persistence, tuning, and tweaking. That's what I did. It's called Trader Groundhog Day. Working hard, waking up in the same place. Is that you? Yeah, the delay from Discord to YouTube. YouTube is like a 10 or 15-second delay. If you're in the Bookmap Discord Trader Lab community server, it's real time. So, and that's not saying, you could obviously observe it anywhere. And I always suggest traders, you should review these streams because every time you watch it, you learn something. And you also, if you're following the Trader Lab and you visit the community, you're going to see something. What you're going to see is consistent application of process in a random environment. Is this a trade you think is okay? And it doesn't mean it wouldn't be a stop. You see the way I trade, I'm trading for this. I'm not interested in this. I can trade it. But this is where the payday comes from. And there's a next target. So we had this, and now it's trade management. It's always trade management, but let's watch the behavior here. Why is this behavior important? You're saying, Tom, why? Why is that? Because we had a sweep and the buyers took control over here. So it's a potential area of behavior. And if we get below it, then we're going for our next target, right? So I don't think this is very complicated. I think it's kind of simple, actually. What is hard is actually being prepared and knowing what you'll do. And that's where the work is done. All the work is done outside of trading hours. And most traders just show up and play a video game. Not to insult anybody, but I'm going to say is that's what most do. That's what retail traders do. They think they're sitting in a casino playing a one-armed bandit. And no, that's not probably going to be sustainable. Even though, just like the gamblers, we all have winning trades. That's what keeps us doing processes that this is starting to bug me. You see, uh, that's what most traders do who don't have an edge. They just play a game. Hey, so potential support or rotation off of here. If we break under here and come back and test, then potentially we're going for this. Not a recommendation. Let's watch it together. You guys have some questions, throw them in there. I'm out of time. I appreciate you visiting the Trader Lab. Use the link in the bottom of YouTube if you found this interesting and maybe even motivating. If you're kind of lost in the desert, doing the same processes, trying to fix something, what I found, and it only took me more years than I care to remember, it's kind of traumatic, but we all have random winning trades, and we're all going to try to get more winning trades, of course. But if we have a defective process, we're not going to have a different outcome. We're still going to have winning trades, but we don't have an edge. So in spite of the winners, which are random, and they are, if we don't have an edge, even with the winners, we're still going to be a loser. So that's why you can have a couple winners in a row and everything is wonderful, but you're still losing. Why? Because you don't have an edge. Gamblers win. Remember, this is a location where the buyers took over. I am out of time. Please subscribe to the channel. Use the link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab. There's no cost. Say hi, introduce yourself. I like to meet everybody. Also, there's a library of webinars, and these trades I'm actually sharing with you. You can see the broad strokes of them here. These are actual live trades I took. Some of this is research. I was working with Bookmap developers a number of years ago, 2020, and things like that. And you'll see these structured trades. Where are the targets? What was going on? These are live, real trades. And others are screenshots. And also, this is order flow. There's a lot more. And there's the library of webinars. Start with the first one, the primer, so you understand what's a high-level overview of what I'm doing. This is really about integrating Bookmap order flow tools. Bookmap's a high-tier order flow product. I'm integrating it with the volume profile, market mechanics, using structured trades. Hope you got something from this. I'd really appreciate a like on the way out. Be sure to save this link and review this at the end of the day. You know what our targets are below, and you know the possibilities. Other than that, you don't know what will happen next. All you can do is use a structured, vetted trade plan, develop the discipline to accept the random outcomes, and over time, assuming you have an edge, you will extract the dollars from the other participants. Thanks, guys. Don't forget to like. Look forward to seeing you tomorrow.